Good evening and welcome to tonight's live webinar, member only content, where we look at ASX investment opportunities in review for the 11th of January. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances, and realise that not all investments are appropriate for every individual. Investor Signals provides a broking account service capturing our model portfolios, our ASX high conviction and independent portfolio, where we use derivatives to enhance portfolio returns. And if you'd like to discuss the brokerage account service, please contact me on the number on the screen. The technology we're using tonight is the member area. If you're joining us for the first time or you're on the trial, at the end of your 30-day trial, you can subscribe to the technology for $1,320 for the year. And if you'd like some assistance with navigating your way around or general strategy review with the market, again, please contact on 1300 614 002. The graph up on screen, we continue to ensure that we're all mindful of the extended valuations in the market. We shuffle the support line up a little bit tighter than where we were last week, so it's just over 13,000 index points now on the Nasdaq, and we'll take a closer look at that shortly. The expansion, it's worth just pausing and explaining sort of what's happened in the market here. So the rally's predominantly not been an earnings driven rally, it's simply been a PE driven rally. So what has happened is liquidity has been pumped into the market, which is money that the Federal Reserve creates, a new money supply that goes into the banking system predominantly. The US banks have taken that money, have bought equities, which is obviously in line with what the Federal Reserve see as acceptable usage of those funds, has driven up market valuations as a result of all that liquidity. And then obviously you've got some exuberance on investors' behalf, and we're seeing that reflected whether it be in Bitcoin or Tesla shares or other pockets of the market that are trading at some would suggest the bubble levels, and I think a time will come where you see a major correction in some of those names. Not to say that over the longer term they can't recover from that, but certainly from a valuation standpoint, there's pockets that deserve to be questioned at the moment. So with that in mind, the two focal points need to be keep an eye on the Nasdaq for a break below the moving average. The first trigger will be a reversal in the Nasdaq below 13,000 sort of points as an approximate level. When I say it's been a PE expansion, what the market's looking at is a very optimistic picture in 2022, which it's worth just pausing and looking at this. We're on the cusp of the December quarter earnings ready to be announced in the US, so we'll get 2 or 3 weeks of S&P 500 earnings, which will start to analyze those. We'll look at whether the growth trajectory is there, and what we're really looking for is a pickup from from roughly 100 and the equivalent of say $137 of earnings, which is where we are for 2020. What we're looking for is the beginning evidence that 2021 is going to deliver roughly a 20% pickup in earnings. So if this quarter doesn't happen, there's no doubt analysts will maintain that it's simply delayed, and next quarter the uptick in earnings. But there is a risk that at some point analysts actually start to downgrade their outlook, and that would certainly be a catalyst for a market correction. So this is an important earnings season that we're on the cusp of, and I'll continue to monitor obviously the banking stocks. So what we'd expect in the US banking stocks as they come through is to see a large amount of earnings related to investment and trading related income, which would be reflective of essentially that free money they've received from the Federal Reserve. It's gone into equities. They're crystallizing profits or mark to market profits on their equity exposure. But at some point, that becomes a diminishing return for them if earnings don't actually pick up to support market valuations. And hopefully that explanation just gives you a bit of an understanding of where the risks sit in those high PE names and why we're tilting still towards healthcare, gold, telecommunication, and some other select names which we'll focus on tonight. So again, keep in the back of your mind this picture with where we actually are at present, which is 2020 earnings, what we know, which came in roughly around $140 of earnings. So this is average earnings for all S&P 500 companies. Now we're looking for a 20% pickup in 21 and another 20% pickup in 22, which justifies the PE valuation that the market's on today. So there's a lot of blue sky already priced into the market. With that, let's have a closer look at the ASX top 100 stocks. And before we do that, let's look at this Nasdaq, and I'll just roll the chart in here and look at it a little closer. So on Friday we had a close on the session highs, so reversed off the lows, closed on the session highs. That's a bullish sign. It's still above the moving average. The stochastics still positive, so it's not until we see a reversal of that index back below 13,000 that I'll draw your attention to the short side of the market or the inverse ETF opportunities to think about. Within our local market, we'll roll through the top 100 this evening, so we get the percentage gains to the top. We come over here, organise it in signals. So as I toggle through these, we're going to be looking at all the stocks under buy signals. Then we'll get to a certain point and I'll just highlight the shift where we go from buy signals to sell signals. Within these sell signals, there's some counter trend trades that I'll just pause or comment on throughout the recording, but generally, where the bulk of our long portfolio exposure is obviously made up of the stocks that are under buy signals. So the first one, there's TPG. They report their earnings in February. They've got the merger with Vodafone. We'd expect to see some positive commentary out of the company following that merger, especially around cost synergies. So look for this as an opportunity as getting oversold. It is below the moving average. The stochastics may be just starting to turn back up, but certainly if we were to see that push back above that moving average there, it would be confirmation, I think, that you're getting a reasonable entry level or at least some institutional buying ahead of the upcoming earnings result. ResMed reports later this month. I made a post on the blog about it. It's under algorithm buy signals support. They're at around $27, and the last earnings result was very strong for ResMed and came in above analyst expectation. Computershare have been a bit cautious on this following the cancellation of the takeover offer for their competitor Link. We know Computershare had falling earnings coming in to the most recent reported result, so just not sure that there's enough evidence there that the current earnings are going to support another leg higher in this rally. You can see there that it was originally under algorithm buy signals off that 1185 level, rallied up to 15. It's pulled back, not quite, but roughly 50% of that move, so should find support somewhere between, say, $13.30 and $14 there. But certainly be taking a closer look at that earnings result. The energy sector's been strong. It feels to me that we're maybe getting to a point where there should be a little bit of exhaustion in the rally and a pause within these energy names, and we may get a buy on the dip opportunity. But certainly Beach has been under algorithm buy signals. It's been one of our preferred energy exposures, as well as the counter trend trade in Woodside Petroleum. Lendlease is a recent algorithm signal down here at around 1275. As I've discussed in previous recordings, the long-term outlook for Lendlease, the company's well positioned, but you could certainly understand that over the last 6 or 9 months it's been difficult trading conditions for them. So again, we look for the upcoming earnings result. We'll comb through the numbers and take a closer look at the strength of the balance sheet, free cash flow, have a look at what their forward development pipeline looks like, and really sort of analyse the commentary coming out of the company there. Link, the correction there was, as I mentioned, the cancellation of the takeover offer, so the stock's corrected from say 560 back down to around 450. The Algo Engines picked up the higher low there at around that 450, so we'd be looking for it to consolidate and move sideways. JB Hi-Fi, it's obviously been a good performer. It's rallied from much lower levels there, but the short term, so again, if you're joining us for the first time, the primary signals are down the bottom here, the green boxes. The red and green arrows are shorter term interim trends. So the first warning is the red arrow. The second would be a trading below the moving average. But for the most part, we don't see too much in the way of downside risk for the time being for JB Hi-Fi. Qantas under algorithm bias signals, but we're not doing too much there at the moment. Stockland's under algo bias signals. The market got a little bit excited last week or with Stockland's announcements announcing that they're extending their portfolio exposure into like industrial fulfillment centres, so e-commerce type fulfillment centres. But still beneath the hood there's probably issues there that Stockland are grappling with, and again it'll be another earnings result that we'll have a look at reading through the data a lot closer. AusNet Services under algorithm buy signals, but not a stock we're doing too much in. APA Group, I'll continue to like this as an infrastructure play. It is below the moving average, so we'd be waiting for a reversal there. So it's under algorithm buy signals, has a green arrow. The next signal to look for would be a positive close above that average, and I'll draw your attention to that on the blog. Carsales.com, we'd waited for this to correct from sell signals into buy signals, support there at around $18. We think that holds up well, even in a soft market. Carsales should be a fairly defensive area to hide out. Maybe one that you think about selling calls over. ASX, so keep this on your watch list. It's under algorithm buy signals, has the positive interim green arrow. The trading volumes for December were down a little, especially in the derivatives area of the market, but from a valuation standpoint, we've seen a correction from 92 down to 72. Should be getting close to finding support there. Aristocrat bumping sideways. It's an earnings result we're most interested in having a look through that breakup of sort of their traditional machine-based business opposed to their digital revenue and stream growth, and I'll comment on that on the blog. Fortescue, we've taken profit here on the iron ore names over the last week, just as really both iron ore and banks we've taken profit on, just as a de-risking strategy. Cube around fair value here at $3, good long-term prospects, but not too much on the upside, I think, at the moment. Again, we'll review that as the earnings results come through. IDP, we'll start taking a closer look at this as a new addition to the top 100 index. Under algorithm buy signals from lower levels there at $14, and you can see that I've shuffled support up at around that $18. The index itself, just a broad comment on the index, is now under sort of that interim sell signal, but the market is above the average, so the first warning will be a trade below the average and then below the support, but we'll have a look at those numbers specifically on the XJO, and I've already prepared a post for tomorrow that you may like to keep an eye out for, which references those support levels on the XJO index. Wesfarmers, terrific company, under algorithm buy signals from the support level there at around 43, maybe getting a little expensive. It'd be nice to see it pull back and then buy on the dip, but we continue to hold Wesfarmers. Amcor, value on offer here, the correction from 1650 down to 1450, 1480. We're still seeing cost benefits come through from the Bemis acquisition. It's interesting, obviously, the strong Aussie dollar pushing up towards 77 cents has had an impact on a number of companies that have offshore earnings, in particular US dollar earnings. that are converted back to Aussie from a reporting standpoint. So that's been an area of the market that has been under pressure as the Aussie dollar's rallied. You've seen healthcare stocks and something like Amcor, Brambles, all under pressure. But we're maybe in the early stages of the US dollar finding support after an extended sell-off. So we're starting to see a little bit of buying in the US dollar. We're starting to see the yields ease back on the 10-year Treasury. So it'll be interesting just to see how that relationship between US Treasuries, gold, and the US dollar plays out over the coming weeks, and I'll continue to sort of update that on future recordings. But Amcor we like at around that 1450, 1480 level. Ramsay Healthcare we think's a buy down here at around $60. QBE Insurance, IAG's having a reversal, which I'd spoken about last week. QBE we don't mind, but only a small exposures within that insurance space from a portfolio allocation standpoint. Sydney Airports maybe getting closer to filling that price gap back down to around $6, but hard to get too much visibility on what the current earnings look like there. Sonic Healthcare, buy this, sell covered calls over it. Cochlear approaching oversold levels. It's under algorithm buy signals. It is below the moving average. Wait for it to trade back above. You can see the second level of support down there at 175, but just be patient and wait for it to trade back above that moving average. Fisher Paykel, I like this from a fundamental standpoint. The company's delivering high single-digit earnings growth, relatively defensive business position within the healthcare space. It is under algorithm buy signals. Got the interim arrow there, supported around $30, is below the moving average. You could just be a little bit patient and wait for that to trade above it. Altium, so we're seeing some of these high PE tech stocks miss on earnings, and as a result we're seeing some of these share prices punished a little bit. Altium is under algorithm buy signals, but well below the moving average. CSL, we like this secondary level of support down there at 265, is below the moving average at the moment, so just again be patient, wait for it to reverse back above the average, but it is under algorithm buy signals. Stochastic starting to look positive. I'd be surprised maybe we get a test of that 265 in a soft market. It should be getting close to a level where it finds support. GPT almost filling the price gap now, back down to $4.30. Hard to get excited about exposure to commercial property at present, but it is an area that the offshore fund managers see as a recovery opportunity or a value opportunity in the market. So just keep that in mind, and we'll take a closer look at how GPT reacts if it trades down and fills that gap to 430. REA Group, we like this, but expensive, so we want to see this correct a lot further. Maybe back down at around that 120 level would be a new entry opportunity there. Coles, we see this really bumping sideways, so sell covered calls and drive the extra income. Afterpay, it's had a great rally from the original buy signal, trading on in excess of 30 times revenue. This is, you could think about this in the same context as Bitcoin or Tesla, or the market's got a huge amount of optimism about ongoing earnings growth within the business. Buying into it at these levels seems a little too risky. We'd want to see a correction and would take another look at this on the next algorithm buy signal, but a long way from that at present. Transurban, increase COVID activity in America and in Australia is weighing on sentiment around here. We've seen the company obviously cut their dividend as expected, but getting back down to support at around $13. You'd want to see the stochastic start to turn positive. Did go ex-dividend just before Christmas time. Next, DC, a little bit cautious on this one. I've spoken in detail about some concerns there around from a free cash flow standpoint and the way the company reports their profits, and I'll take a closer look at that in the upcoming earnings result and see if we can capture that in a blog post, and I'll reference that in the future recordings. Obviously we're approaching more US earnings season, so we got 3 weeks or so of sort of the main component of the S&P 500 companies reporting, and then from an Australian standpoint, sort of beginning of February, we start to see our companies deliver their results for the December half. Ansell, I like this from a fundamental standpoint, as is the case with that Fisher Paykel. Support there at around $33. Just see, if we do trade down and test that 33, you can either buy it off that level or just be patient for it to trade back above the moving average. But we do think that Ansell can sustain single-digit earnings growth, which is pretty good in a market that's been relatively soft. Cleanaway bounced off support there. Original algo signal at $2, higher low at 230. Maybe it tracks sideways, but ultimately the direction for Cleanaway should be higher over the next 2 to 3 years. They're well positioned in a segment that's receiving strong government support at the moment, and creating some interesting business development opportunities in the process as Cleanaway pushes more into the recycling space. Domino Pizzas, so we like this. I had the algorithm buy signal there at around $73. We've traded out of it in a number of cases up at around this sort of $85 to $88 level. Just pull back at the moment. The 50% retracement will be back to around $80. We'll keep an eye on that and update you on the blog. A2 Milk below the moving average at the moment, so just be patient. Look for buying support to increase there. Northern Star, now the gold stock started a rally. We saw gold jump back above 1900 an ounce, and then we had a fairly substantial correction in the order of 4 or 5%. That's hit the gold stocks today, but I'd expect that in an environment where US interest rates, and in particular I'm referencing the 10-year yield, starts to run into resistance at just over 1%, we should start to see a backdrop where gold can find buying support again. So I'd be surprised to see this sell-off take out these lows, but we'll continue to monitor that closely over the coming days. Newcrest we like, still think there's space for gold exposure in portfolios given the risks in the overall equity market backdrop. Saracen merging with Northern Star, we like that combination. Appen Group, we saw their earnings fall 30%. It's reflected in the lower share price. The range here is starting to narrow, so between 16 and 22, we'll start to look for that to cross back above the moving average. Evolution, our preference is probably more Newcrest, Northern Star, Saracen. Insurance Australia Group, there's that count. So now what's happened is we switch from stocks that have been under algorithm buy signals, which are therefore in the model portfolio, to now stocks that are under sell signals. So the reference point here is that the stocks under sell signals are mostly making lower lows and lower highs. At some point that exhausts and we get a breakout higher, and then the stock will switch back into buy conditions. Shorter term trading, you can think about identifying some of these reversals within these stocks that are in downtrends, but generally you want to be trying to capture the momentum in those strong stocks. So your Ansells, your Fisher Paykel's, Cleanaways, ResMed, Sonic Healthcare, CSL, those type of names. Insurance Australia Group's a value play. I mentioned last week that we're looking for it to break above that moving average. It was looking a little oversold. We're seeing that rally underway. Within the energy names, Santos, Woodside, Beach all performed very well. Woodside has been a counter trend trade, and in general we've been fairly bullish on oil. There may be a pause in that story, but as the northern hemisphere come out of their winter, and we'd expect those COVID levels to maybe subside, from a reported case perspective, travel to increase. If there was a dip in oil, be inclined to buy that with a view that oil should have a stronger recovery, maybe from February, March onwards. Crown up against resistance there at around $10. Magellan Group, not doing too much there. I sort of highlighted resistance at around 65, and now it's back at 50. Challenger not doing there at the moment. I think better off looking at ASX over Challenger. AGL maybe oversold where it is at the moment, so slight technical bounce there, supported by dividend yield. Suncorp again, preference within the financial services sector in general at the moment would be to focus on the ASX. South 32 not doing there. Our preference has been long Fortescue, BHP, Rio, but we're starting to take profit or have taken profit on those trades. Bank of Queensland still cautious on the banking sector. We've played the banks by being long the BNKS, which is the global banks ETF, but we've now closed that position out and slightly leaning on the short side of CBA, CBA and NAB as our main shorts within the Aussie banking sector. Seek thinking that it's up against resistance there at around $28. Oz Minerals, terrific growth story here, but at a level now where we have to be patient, wait for the pullback and the algorithm buy signal before jumping back into Oz Minerals. Westpac up against resistance. ANZ up against resistance. Brambles, so we like this from an earnings stream point of view where we think the company can deliver 4 to 5% earnings growth. The high Aussie dollar is mainly the undercurrent that's pushed the share price from 11.30 down to 10.50. Owning it here and selling $11 calls is a safe way to drive income for portfolios at the moment. Coca-Cola's under a takeover bid from the European and Coca-Cola parent company or Coca-Cola division in Europe. Bendigo Adelaide under resistance there at around $10, starting to look expensive. Boral under resistance at around that $5 level. Origin, I'd spoken about this as a counter trend trade, pushing back above the average. But again, these energy stocks seem to me that we're getting fairly close to a point where they start to run into some resistance now. So think about taking profit on BHP. Mirvac, not doing really there at the moment, is under sell signals. CBA now with regarding, and a similar story as to say the XJO index, where if you're thinking about the short side of this, you may want to just be patient and wait for it to break below that moving average before looking at the short side or taking profit on that. Same with NAB, you might be patient and just wait for evidence of it closing below the average. I'll draw your attention to that on the blog. AMP not doing there at the moment. Vicinity not doing there. So just jumping back to Vicinity and looking at the pattern here, so we can see that the algorithm's picking up the downtrend there, and it's not until it broke back above the average that you'd really start to take a look at that. Telstra at around $3 should find support, driven by the company reaffirming its dividend. So at around $3, expect money to flow into that ahead of the February dividend. Macquarie under resistance at 140. Charter Hall not doing there. We think resistance at 15 and under pressure. BlueScope resistance at 18. Incitec still under algorithm sell signals. There was a counter trend trade that I'd commented on from around $2 back up to $2.50, but I think it's sort of that story now's played out. Not doing there in Oil Search. Tabcorp resistance at $4. Reliance not doing there at the moment. Scentre Group resistance at around $3, but not something we're really too active in on the short side. Orica, so it ran into algorithm sell signal there at around 17.75. We've seen the stock push lower since that signal. Worley's under sell signals as well. Atlas under sell. Rio, so this has broken out, made a new high. So what we'd expect to happen now is on the next sell-off, maybe back down to just below $100, we'll be looking for that to shift back to an algorithm buy signal and for it to be added back into portfolios. Dexus under sell signal there at $10. Medibank, with the rally that we've had in Medibank's been largely driven by the company or the health insurance sector increasing premiums, but we know that the earnings trends coming into their last earnings result were not particularly strong. So it'll be an interesting earnings result to take a closer look at Medibank, and I'll update you on the blog as to what that true underlying earnings trend looks like. Star Entertainment, this is something that I think could disappoint the market in the upcoming result, so maybe more on the short side there with Star. Treasury, the question here, we know the earnings have been damaged by lower distribution opportunities into China. We'll be looking for commentary out of the company that they're seeing some level of turnaround in their margins that are coming from the US distribution channel, and maybe a resolution as to increased distribution in Asia outside of China. But at the moment, the stock's certainly undersell signals. The last algorithm sell there was 10, now trading sort of down around that $9 level there, so still cautious and not doing there in Treasury. Spark Infrastructure, recent sell signal there at 220. Reece not doing there at the moment. Horizon, the last signal there was the algorithm sell at the top there at around $5, and we're continuing to see that trend lower. Woolworths, not sure this is really something you need to be too panicked about on the short side, but it is under algorithm sell signals, which just makes us more inclined to sell covered calls. I think consumer staples in general, so Coles, Woolworths, should remain fairly well supported. James Hardie under resistance there at $40. Goodman Group, so broken out, it's made a higher high, but we're looking for a more meaningful sell-off, maybe back down to around $16 as an entry level there for Goodman. Alumina up against resistance at around $2, so not doing there at the moment. Aurora, there was some questionable trends within their earnings numbers over the last 24 months, so I don't think there's enough evidence that those problems are resolved, so I'm still inclined to think that we're under resistance, but we will be looking for commentary out of the company that through cost rationalisation and new products that they're able to to maybe find a support level in earnings and start to turn the picture around there. What we'd be looking for there is a break higher in the price, a pullback, and a shift to algorithm buy signals over the coming months. Ampol, the story here is supported around 22, resistance at 30, back at around $25 is about fair value there. Mineral Resources broken out, created a higher high. What we're looking for is a more meaningful pullback and a new algorithm buy signal during the course of this year. WiseTech not doing there, under resistance at 33. NEC under resistance at $2.50, should move lower from where we are at the moment. ALS under resistance at $10, expect that to move lower. Soul Pattinson under resistance, expect that to move lower. Xero, we've started to see this long awaited correction here. It has broken out and made a higher high, so I'd expect to see an algorithm buy signal maybe somewhere back down at around this $110 to $120. I'll keep you updated on the blog. We're comfortable to add that into portfolios on that next buy signal. Downer EDI, preference remains CIMIC, and there we are back to TPG. So just to finish this evening, you'd know from the last few weeks we've looked at the exposure into China through the IZZ ETF. We've seen that rally off that 60 level up to 63. The other alternative there when thinking about exposure to China is more of the new economy tech stocks there, so around that 850 level is support. And the XJO index, just to revisit those levels and remind you about the post on the blog tomorrow. So we still have significant levels of caution around PE valuations and earnings. Maybe the catalyst could be an event such as the US banks having a closer look at what component of their earnings are coming from investment income related, which is, will be of no surprise given the strength of the rally in the market and what I explained at the beginning of the webinar. But that's unlikely to be repeatable from where the market levels are at the moment over the next quarter. So it may be a case where the hedge funds sell into a strong result in the US banks. What we'd be looking for in our Australian market would be a break below that 10-day average and then a break below the index level. And just to put the mouse on there, so approximately 6,000, say 590 points as a level, if we saw it, which is that support line you have on screen. And to turn these lines on and get your graphs set up the same as mine, if you just put your mouse over that button and click on show Leon's charts within your member area, you'll get all these same levels put on your graph. So to recap, we're leaning towards names such as TPG, Newcrest, Northern Star, Saracen, Fisher Paykel, Cleanaway. We continue to like Coles and Woolworths, but sell calls over them. ResMed, Sonic, CSL, still within that healthcare space. Ansell we like. APA, maybe Cochlear, keep that on your watch list. Could be getting a little bit oversold. We like Amcor as a defensive opportunity at 14.50. ASX at 72 looks to be getting oversold. Ramsay Healthcare at 60 is getting oversold. Car we like. Aristocrat, we're a bit concerned about what the earnings numbers actually look like there. CIMIC, take a look at that on the graph, and I've been posting on the blog. Another one just to have a look at there is Bega, back on support. And any other opportunities I'll summarise on the blog over the coming days. Thank you for listening in, and if you'd like to talk to me further about our strategy or the broking account service, please contact me using the details on screen.